This conference will now be recorded.
Hi guys, this is SonicR Mastery team. How are you guys today? Okay, let's talk about week number 13 market look ahead. As you can see from the screen, yesterday was Monday and we didn't have much of the item yesterday, right? And start from today is going to be quite impactful in my opinion. But as the whole of this week, right, we don't really have much of the item going on like what we had on last week, right? But this week we still have quite a few news and event will be coming up. I think the major one will be the what we call it it's a parliament vote for Brexit in my opinion. So please look on the British pound item. So let's take a look on the British pound here since we are talking about British pound. Okay, British pound, they have been like going big sideways for the last 2 weeks, right? One of the major reasons is that of course whatever is developing at the the parliament voting and stuff like that. So it's rather risky. I would have to say it's rather risky to take any position at the moment. But of course, you need to choose some sides of the eventual outcome. All right. So I think the eventual outcome might be bullish for you, bullish for British pound for this case, and it will bring this pair up higher. Okay. So does it necessarily have to be British pound US dollars? It can be British pound CAD, it can be British pound Aussie or something like that. All right. But anyway, I think that as in overall British pound can be quite bullish in the near term. So I'm still expecting this pair should go up higher. Okay. But of course, nonetheless, please take note that we do have a lot of risk going on right now. Of course, we can be right, we can be wrong as well. But it looks like I think they are trying to break out up. Okay. So yesterday I posted the so-called our trading view analysis. You can follow us in our trading view as well, our Telegram. Okay, and you can take a look that like I posted that it should go somewhere near 1.323735 level. So it's already one to our so-called first TP level already. It was kind of like easy for sure. I think the next one will be 1.329 should be pretty easy as well. Of course, we are not sure whether we there or not, but likely that it will go up to that level first. And eventually they should able to break out up. Okay. So is there any development along the way or any changes along the way? Of course, I will update in my Telegram and trading view. So please look out for that. So just to conclude, British pound, US dollar for this case, I am standing with slightly bullishness for a time being. Okay, the reason being because not because of I'm bearish on US dollar or something like that. No, not because of that. Is because of I think the outcome of this so-called this Brexit, the dilemma, right? I think the outcome will be bullish on British pound in my opinion. Okay, so let's see how it's turn out. Okay, another one let's talk about is US stock market. All right, US stock market, we have a bit of hoo-ha on the last weekend. Remember last Friday, right? We have the yield curve inversion and stuff like that. Okay, if you look back to the history, okay, it's true that whenever the yield curve inversion occur within like a 10 or within like 10 or 20 like a month later, then there was a sort of like a recession. So if by following the history or learning from the history, right, what we can learn is that even if there is a recession, all right, even if there is a recession, there will not be an immediate recession after the yield inversion, so-called the yield curve start to inverse from the between the short-term bond and the long-term bond. Okay, so it's like we still have ample of time in between. So I think last Friday move might be like like a panic move, and I do not want you to get carried over and short the way down and stuff like that because they might not go down immediately. This is what I'm trying to say. Okay. So when we look from the technical point of view, we have because of this particular so-called news on the last weekend or Friday, right? We have so-called able to break it down below this resistance level of 25,780 to 25,970 level. So it's like they are starting to show some signs of bearishness already. So they may not go down immediately, and they may even come back up to retest, in my opinion, because because of the last Friday, a lot of people are fast and furious, going to get out of the market. What they do, they sold at the late price already. So I think the market maybe go up higher to swing these people out first, and before they go down again later. So to conclude, what I want to say is that to, if you want to short it down, not in the hurry, make sure you short it down from the decent so-called promising level, right? So for this case, I think the better level for you to take a look to short at is somewhere around 25,750 or even 26,000 level. So you are not in the hurry to short. Yeah, of course, in the another way, on the another way round, unless there's a bearish decent candle showing up again, then you should short it down. Okay, so I repeat, yeah, this yield curve inversion doesn't really mean much, and also they don't really, they shall not have any immediate effect. Okay, so I think maybe I think the news and media play too much of the, too much of it already, because they really want to make people spook out and sparks like spook out and like scare people up like that. Okay, there may be downtrend or downturn along the way, but it may take some time. Okay, so not in a hurry at all. So the next one, let's talk about the next one. Let's talk about the goal here. All right, next one, let's talk about the goal here. Okay, so gold, right? Gold we have been bullish for quite a while. Okay, but over the last weekend during our inner circle net meeting, and also at the same time on my post yesterday, I just post some caution that they may go up a little bit for a time being, but like there might be some sort of like pullback might be coming along the way as well. So what am I talking? I'm saying that please be cautiously bullish. Okay, so this is what I'm trying to say. So at the same time, market just ran up yesterday on the sort of like a low volume, in my opinion. So I think the likelihood of running up is stay quite high. They may go to our TP2 level, which is 1326 level. I think I will take some profit around here. Or I think for eventual case, they may go up back to 1340, 1345 level, in my opinion. So for now, we stay quite stay bullish. It just please be cautiously as well, because I think and at the background there may be some sort of like taking profit coming in from the bullish side. Okay, so anyway, of course, we will talk more if there's any bearish candle, or if there's when they hit a certain strong resistance level, then we will talk about it. For now, I don't think we are hitting to any strong resistance level for this case. I think the decent one is 1326, like I mentioned, 12526. Another one is 134.4 to 135 level. So wait for a while if you want to short. For long, you are stay for now, but please watch it out closely. So I have already mentioned about 3 items, right? British pound, US dollars, and another one is what we call it, gold here. Okay, last but not least, I want to talk about one particular counter that I'm seeing right now. Okay, this is basically it's a Hong Kong. All right, Hong Kong, right? It have been going up for the past like the whole month for a very nicely up. It have been going up really nicely. But I think last Friday, so-called the candle formation caught my attention, because the candle have a very good gap up, and but they go all the way up near to $1, but they have a very nice pullback in the intraday. Even though this is considered to be like a bullish looking candle, but in my opinion, it means more than just a bullish candle. It kind of like kind of like an exhaustion, in my opinion. Exhaustion pattern or exhaustion candle, in my opinion. That's to sign to show that the bulls are getting tired. So I think that may be a good time for bear to come back in. So they may do some they may do some pullback for a time being. Okay, or go back all the way down or not, I'm not sure, but at least for a small pullback is very likely. So I'm expecting some decent levels such as like 0.90 level will be 0.90. Another one is 0.91. So these two region, right? These two region will be a nice place for you to take a look if you have a short, and if you may want to take a profit around this region. Okay. So this is the one of the Singapore counter that I want to mention about. So thank you very much, and I see you guys next week. Yeah. Thank you very much.
Okay, so I'll be sharing two counters which I see have some potential to make its up move. The first one would be the New Zealand dollars to Canadian dollars, which if you were to look at the left-hand side, we are seeing this previous resistance level being broken up strongly by yesterday's candle. While the entire approach as it goes towards the resistance level is also showing healthily by the volume. It's also increasing. So with that, once price has already breaks, now we have seen that price has already breaks this level. I am seeing that it will continue to make its way up even higher. All right, so the ultimate target level which I will be looking at would be 0.7375. All right, so long as 0.9209 holds the price. Up next will be the euro to pound, which even though we have a big sell down 2 days back, we are back at the support level. All right, so we are seeing a first sign of a higher high. All right, and then this could be the bottoming, and this will be the sign of a reversal which is coming in play. So with that, I'm bullish on it. I'm saying that it will eventually slowly goes its way up towards this resistance level at 0.87. So do bear in mind that the entire structure is still bearish, so this up move might be short-lived. Alright, so this is all we have. Thank you for watching, and we'll see you guys next week again. Bye bye.